What is up, YouTube? Welcome back to Stacks the Numbers, and it's Monday morning here. Well, afternoon now. It's just hit 12 o'clock, but I wanted to do a quick update here just on a company that we looked at just to show you guys again essentially what the Buffett method looks like in real time. And we're talking about the Hershey Company, ticker symbol HSY, listed here on the New York Stock Exchange. Stock is up to 208.63, hit a high today of 210.23. And you can see this is a 1 month chart, and you can see basically exactly 1 month ago here, the 17th of April, this stock was down here at the low 180s. It was down, it was dancing around this trend line here for a couple of days, right? Sells off, pulls back to the trend line, retests, bounces around, gets above it, and then all of a sudden, boom, we have momentum. And inside of less than 30 days, this stock just went from 180 to 210 today. So congratulations to anyone who got involved. But this is what I mean when I say, again, look for a brand name stock that trades at a discount and then step in and ride that wave. I mentioned in comparison another stock, Philip Morris. In my opinion, this is a company that I always keep an eye on, and I always said basically the same thing. When I see a stock like this dip down to like sub 90 and start hitting those low 90 and high $80 levels, that's usually when I would step in. I would buy some calls, give ourselves a little bit of time, and then ride that wave back up into the mid high 90s, and boom, we're in, we're out, we make a nice profit. And this is basically what I wanted to show you again with the stock like Hershey. You can see they beat it up, they bring it down, right? These earnings come out, boom, we're a little light. We spike up initially up to 210, then we start pulling back, we pull back, boom, now we're down here in the low 180s. We approach this low trend line, dividend got paid out, they beat up the stock, so we step in, we scoop up a brand name stock at a deep discount, and if we're going to do the options, all we have to do is buy ourselves some time to allow the rebound to happen, and then boom, you can see roughly 3 weeks later, all of a sudden we're back at 200. Calls would have paid off, right? Then if you want, you could try to time the sell-off also, and you could buy puts here. But again, you can see we ran up to the trend line here, 203, 204, rejected off the trend line, started to pull back, and boom, this is the move that we just looked at. Now we're in mid-April, back to 180, step in, buy a month or two of time if we can, right? Because time is king, and boom, now we're back up here to 210 today, and obviously that was a great move. And this is what I mean. This is why I say you have to try to pick your spots, but also more importantly, this is why it's worth it sometimes to actually have a watch list and develop that hit list of a handful of stocks. Keep an eye on these price ranges and then try to step in, obviously near the lows, and try to bet against it at the highs if you'd like. But of course, it's easier said than done. But at the end of the day, I'm sure you guys can understand the gist of what I'm saying. And it's funny too, because if you recall this entire month that Hershey has been rising, everyone was commenting, oh, what about the rise in cocoa prices? How do you think that's going to affect Hershey? Well, again, there's a brand name company in the space, and originally when I looked at it, I felt that they just beat it up way too much, and I think it was maybe back here, maybe tail end of 23, and I basically said that in the numbers, in my opinion, it looked good, and chances are it was going to make a comeback. And of course, it started to make a comeback. Company posted earnings here about 2 weeks ago, was May 3rd. As you see, nice beat on the EPS side there, beating by about 11%, and beating on the revenue side there by about 4.5%. So, in my opinion, we can keep going. If we do hit this next top trend line, you can see we're looking at about 220. But markets were rising, then we kind of turned red. Now we're back green. So stock is kind of bouncing around here. Shout out to the guys in the Discord. I called out some puts up here when the stock was like 209.60, and you can see it started to get weak a little bit and started to pull back as the market started to sell off. So that was a good quick little scalp play in and out. But again, overall, this is essentially the Buffett method. And I know Buffett, obviously, he deals with a lot of money. He's able to buy shares and hold them for like 2 years if he needs to. So I understand if you're an options trader, you're like, yeah, what does this have to do with me? But again, if we can find a good price entry, whether it's too high or too low, and we can afford to buy ourselves time to actually let the play develop, then in my opinion, it should be very easy for you guys to make consistent calls here. So again, something like a Hershey, you want to play this now back down to the low 200s, definitely understandable. But again, another example, something like a PM, in my opinion, Just a phenomenal company that usually always rebounds, and if you can try to time it correctly, it's just easy. Same thing here with DraftKings. DraftKings we've been speaking about as well. And you can see today it looked like we were kind of wedging. We recently started to rise here about 30 minutes ago here on DraftKings. But overall here, well, not a 1-year chart. Let's pull up like a 6-month chart. Actually, not really. We need just really from these last earnings. But as you can see, a little bit light on the earnings here for DraftKings. But for the most part here, look at this. Going all the way back to February, you can see this stock, for the most part, has been above 40, right? So we hit that 40 psychological level, then we ran up to about 45.5, and then we pulled back to 40. So now that it's at the low end of the range, in my opinion, you would step in and you would buy some calls with some time on something like DraftKings. And then you can see roughly 2 weeks later, we're back at 45. So boom, you're in, you're out. Then if you want, you could try to bet against it, but basically, the point is just to keep an eye on it and wait for that entry again. And you can see we pull back to the low 40s, and then boom, a couple of weeks later, we skyrocket up to 49. And then we have a huge sell-off, and you can see, look, as we approach the low 40s, forget about the flash crash, right? Because in my opinion, that is when you would actually potentially average down if you're really keeping an eye on it and you're confident in your range. But you can see again the pullback to the low 40s, and then boom, we run back up to 45 and change, right? So this is what I mean when I speak about positioning yourself in a quote-unquote secure trade, right? Increase your chances of making these trades correctly day in and day out. And in my opinion, listen, if you guys like bought, calls on GameStop last week and we see what happened today, then listen, congratulations. Obviously, I'm very happy for you. But you and I both know when you play these meme stocks, sometimes the timing could be off, right? So even when people were talking like back in the day, like Clover Health, CLOV, people were talking about that short squeeze. And it did eventually squeeze and the stock ended up running. But if you didn't have a lot of capital on hand and you bought, some calls, let's just say maybe like 1 or 2 weeks out, if it didn't come to fruition, boom, that's it. You either took a big loss or you let it just expire worthless, and that's it. So, in my opinion, it is much more advantageous if you're able to buy time, and I've been preaching this for a while now, and something like Hershey, in my opinion, is just a perfect example. Again, over the last month, about the last 4 weeks, the stock from 180 to over 210 here slightly today. So back here, mid-April, if you were able to buy a month's time, but if you went this far out of the money and you bought like 200s, 205s, 210s, chances are they were probably pretty cheap, and the average person could have afforded a few of them. And now, again, you're investing into a brand name company that you just stepped in at a discount. In my opinion, there's like a 90+% chance that the rebound could start to happen. And then obviously, as it does begin to happen, you're happy as a pig in shit. And then boom, you sell your options and you make a couple of bucks. But let's switch over here to stock charts real quick. And this is what I mean. This is why I say, we can catch these big run-ups, and then we can potentially try to catch a slight sell-off here, even if it drops about half of what it just ran, even if it stays above 200. Chances are it could pull back easily 3, 4, 5 points from this high 208, 209 level, right? So we could potentially step in on some puts here. And we can look at the RSI here. Now the RSI is above 75, right? Because the stock's been running, the MACD's been climbing. So now on the daily, the RSI is up here at 75. So buying puts now on Hershey to play the downside, understandable in my opinion. But overall, catching that upward move, again, all we have to do, in my opinion, is look for a brand name company that's trading at a discount, and then we step in and we buy the dip. And look at all these dips here, even going into the tail end of 23. You can see they beat it up down into the 170s, and then boom, it spikes to 200. And then they beat it back down to 180, and boom, it spikes back up. Back down to 180, and this is the recent move, rallying back up to over 200. So even if you just played Hershey for the last 6 months, you probably made out like a bandit just playing these swings up and down. So in my opinion, work smarter, not harder. But RSI here on the weekly approaching almost 62. So now we can pause for a little bit because we're above the top Bollinger Band on the top and bottom. we're above the top Bollinger Band on the daily and on the weekly now. So we can potentially pause for a day or two, and then it can potentially take the next leg higher. But overall, you guys pretty much understand the gist of what I'm saying, I'm sure. And Hershey, you can see, has for the most part been staying above the 200-day moving average. And again, earnings just came out and they seem strong. So something like Hershey, even in the long term, of course, I like. And this entire time they were beating it up, this is when I started to look at the stock, if memory serves correct. It was about the tail end of 23. And in my opinion, that's one of the easiest ways to do it. In my opinion, that is truly one of the easiest ways to do it. And I know we all want certain tech stocks and we want the big swings, but again, if I told you, you got like a 50-60% chance to time something like GameStop correctly, but on the flip side, if you step in and buy calls with some time here on something like Hershey, you have a 90% chance to potentially make money. Chances are you would consider changing your strategy. So, that's why I always say work smarter, not harder. But let's check the pivot points real quick before I let you go. But overall, Hershey, great company, right? But again, we have to keep an eye on these stocks, see how they move, and try to play these ranges. So next resistance level, as you see here, 211.12. Right, so we almost hit that today. We hit a 210.23, and then we began pulling back. So over the next day or two, we can potentially hit that 211 number and then maybe begin to reject. But this is the first time now the stock has been above the 50-day moving average on the weekly since going all the way back to last summer. So this is why now we can potentially be gaining this momentum again. And this is why if we come back up and continue this rally to this trend line, we can see 220. But the main point of this update video, again, was to show you that, in my opinion, you should keep an eye on the brand name companies and try to play the lows and maybe play the highs, if you can time it well, betting to the downside. And we can see the next resistance level here on the daily is 212.63. So again, what do we have? Like 211.30 and like 212.63. So this is what I mean. Now with the RSI up here at 75, we could pause maybe for a day or two, and then we could take that next leg higher to 212, and then we can potentially reject there and kind of hang out for a day or two before it decides if it wants to break up or break down. But long story short, again, this is basically the Buffett method, and I know we're talking hypotheticals, but of course, if I was running a hedge fund, let's say, and all of you guys watching had money invested with me, this is the type of situation I would look for. Again, I would look for a stock like Hershey, wait for the dip down, step in, basically knowing that we would eventually get back up to 200, and then boom, you look like a genius. So obviously, we know the more money you have, in my opinion, the much easier it is to trade and invest. Because if you had more money than the average investor, you could have bought more time than the average guy. So you would have definitely secured this move. And of course, on the flip side, if you have so much liquidity that you're not even doing options and you're more of the buying share type, then obviously you could have stepped in at 180 on these shares, and now if you'd like, you can sell up here north of 200, lock in a quick 15-20% if you'd like. But I'm going to end it there. So once again, to Stocks by the Numbers, I want to thank you guys for stopping by. If you have any questions, comments, or concerns, let us know down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.